Freedom Finders morning show. It's Saturday. We haven't been here for a while, so good to see y'all. Hope everybody's doing well. We back in the building. It is Saturday. I know we used to always, every single Saturday, bring a special guest in just to drop some gems, to learn something, to highlight what they're doing in the world, and really just to teach the Freedom Finder family. So if you're in the building, go ahead and drop where you're coming in from. Go ahead and say good morning. Y'all know we talk some gratitude. So if you're not tapping in with the consistent daily action, with the daily gratitude with myself, Devin D. Scott, make sure you tapping in. I go live every day. Just a quick 10 minutes to make sure we're being grateful, because gratitude is the one thing that you can do that by doing so, everything else will be either easier or unnecessary. So without further ado, I want to go ahead and get right into it, because I got a guy coming in today. We go way back. Then from high school, I actually haven't talked to him in a long time, so it's going to be a great conversation. We'll have a lot of fun, but we're going to understand the home buying process. He's a broker. He's an owner of the Level Up Broker Real Estate Group. He's in Indiana, so if you're looking to buy a house, if you're looking at questions, it's definitely a guy that you want to tap into. You definitely want to put some questions down in the comments if you have questions as well. But we're going to get right into it, man, because today is going to be fun, just like we do every single day. So without further ado, let me go ahead and fade this out. And I'd like to welcome my guy, Mr. Hart Sumer, to the building, man. Hart, thank you so much for tapping in with us, man. Really appreciate it, bro. So how you doing this morning?
I'm good, man. I'm good. It's been a long time. You know, our families used to run together, used to hang out, you know, play sports. And every Christmas we still watch home videos and see you and me running around with a couple others back on the place, the swing set, the sandbox in the backyard. Man, we go back to them 4, 5, 6-year-old days. So
yeah, man,
I'm proud of you. I'm happy to see you. I'm glad you're doing big things and leaving your impact on the world, man. I'm happy for you.
Yes, sir. Same to you, same to you, bro. It's for real. Like, people always talk about going back to the sandbox. Like, nah, like for real.
Yeah.
You got the
actually have videos of it. The big camera on the shoulder. I'll be my folks are going to be excited to hear I talk to you and caught up with you. So
yeah,
thanks for bringing me in here, man.
Yes, sir. Make sure you if they see this, hello. You know what I'm saying?
Yeah.
Hello, everybody. So
I just shared it on Facebook, so I'm sure Dad is well, we went to the Big Ten game last night, and Dad was feeling pretty good. So he might not be up yet and scrolling through Facebook, but if he is, you know, he's gonna be excited to see it. So
he'll catch a replay. He'll catch a replay. But
that's right.
But let's get into this thing, man, because you're doing some big time things. We didn't talk about it pre-show, but you've been doing some big time things and just meeting some big time people in Indiana too. So would love to just understand a little bit more about that. But before we get into all that and the house buying process, who is Hart Sumer? Like, who are you? What do you do? You know, clearly you're from Indiana, but tell the people a little bit more about yourself.
Sure, man. I you know, I'll keep it short and sweet. I went to Warren Central till I was a freshman. I moved to Greenfield Central, you know, and graduated thereafter. I ran for city council as a senior in high school, man. So I've always enjoyed being involved in community. That's always been a very, very big passion of mine. And I lost my election right in 18. You know, you think it's the end of the world. And everybody called me a whippersnapper and said I needed more experience. So I, you know, went rogue one day. I left work. I went down to the recruiting station. I joined the Navy. I was in the military for 6 years. It was actually 5 years, 11 months, and 26 days. I walked off the ship at 11:01. So, you know, I remember it like it was yesterday. I was in Naval Intelligence. I did a tour at the National Security Agency, which is just outside of D.C. It's the technology side of the CIA, basically. So you got CIA, NGA, NSA. So it's just all in that called alphabet soup of agencies. After that, I moved to Norfolk, Virginia, which is basically Virginia Beach, Virginia. I was stationed on board an aircraft carrier, the USS George H.W. Bush. It was the newest aircraft carrier at the time, CVN 77, which is the whole classification and the whole number. Excuse me, 77's been my lucky number since then. I deployed in 2017. I like to tell people that ship got me around the world and brought me back safe. So 77's kind of been my number that I've ran with since then. I moved back to Indiana in August of 2020. COVID really shut the world down in Virginia. It's a totally different state with totally different political requirements and thoughts. And came back here. I started working, selling houses. And in January of this year, I opened my brokerage. So I know you'll ask, you'll want to know a little bit more about that. So I think that's a good spot to leave it.
Yes, sir. Yes, sir, man. First off, I want to say thank you for your service. Really appreciate it, man. So just thank you, man. Just thank you, because it's a lot. I just actually talked to one of my, how do I word it? I don't know. I don't really have a title. I'm more of like their digital marketer with Oil Rainwater. Sure. So I guess it's a great promotion right now. So get your Oil Rainwater, oilrainwater.com. But he was in the Navy.
Need some royalties off that one for the segue.
And he was in the Navy as well. And I can't remember what he was, but he was 1 out of 4 people that could do something with the submarines and the blah blah blah. I don't know. I'm messing it all up. But he was talking to us and walking us through like the day to day of like what that really looks like. And like he's talking about would stay up for 3 days straight and get 2 hours of sleep. What was your kind of process like before we get into more of what you're doing now? What was that process of in the Navy? You don't got to, however much you want to dive in, but was it like an all day, all night type of thing? You're on guard. Like what was that process for you?
Yeah. So there's a big difference between shore duty and sea duty. So on shore duty, it's almost like a desk job. You show up for PT about 5:45, 6 o'clock. You PT for an hour and a half. You go home, shower, and then you head to work, and you get there and you work from 8 to 4 or 7 to 3, whatever. Ship duty was totally different, man. Ship duty was, something like I'd never expected. It's not like you see on the movies. It's not glamorous. It's not, standing at a gate. You get to the ship at 7 a.m. You do a team huddle. It's called quarters. You meet at quarters. But it's really, like think about, have you ever been in a factory? Have you ever stepped foot in a factory building or anything?
Yep.
Okay. It's like that. You just live there. That's really what it comes down to, right? It's, you've got steel walls, steel everywhere. You see everything's metal, everything's hard surface. And you just live there. So imagine showering, eating, exercising, lounging in a factory building. That's just what we did for a year. So most of the time you stay on duty once every 7 days, which is a 24-hour stint on the ship. So you'd get there at 7 a.m. and you wouldn't leave until 7 a.m. the next day, but then you'd work your full work day. Mm-hmm. So, deployments were long. They were hot. They were, 14, 15-hour days. It was a different experience. If anybody's ever got an interest in joining the military, I would talk to somebody that's been in, gotten out, just to get the realism perspective of it, and not the Top Guns of the world and zero dark 30s. It's not all like that. So
yeah, not the recruiter pitch.
That's right. I had some great recruiters. I can't take that from them. They were very honest. They were real guys. One of my recruiters went to Warren, and he was very, very honest, very forward. It's just, you can't go into the exact detail of the day-to-day, what it consists of. It's more about the job description and the things that you'll be doing in your job, but they kind of omit that, the expectation of what life is going to be like. So, I did have some good recruiters. I got a lot of respect for them, and they're probably on here, so they'll probably see me. I still keep up with them. So.
Yeah, well, thank you guys for your time as well and your service as well. And talking about that, because I've never been in the military or anything like that, but I read David Goggins. I'm sure you heard David Goggins then, right?
I'm gonna look him up while you tell me about it.
Okay, yeah. Cool. So David Goggins, he was in the Navy. I think he's the first dude that went through the SEALs something training. I don't even know what it is, but he went through like 3 times or something crazy. But he wrote a book called Can't Hurt Me. Highly recommend the book. Yeah. But there's so much learning and so much growth in becoming the person who you are today. Can you talk a little bit more about that, of like how it helped you become who you are today when it comes to resiliency, discipline, and just how the person that made you?
Yeah. So the big thing for me about the military was structure. Being an entrepreneur, you have to be able to create that structure that somebody's not, that there's an absent person there to create for you, right? Like, Um, if you're unable to structure your day, structure your time, structure your schedule, your time blocking, your requirements, things that got to get done, not going to bed until they're done, because it can't wait till the next day or can't wait till the next day. When you're an employee somewhere, that is created for you, right? You show up and you work from 8 to 5. But if you want to go the entrepreneurial route, you have to be able to apply that same structure as if there was a boss or a military chief or a military captain or something, whomever, creating that structure for you. And I will say that's one thing that the military absolutely set me up for success was you've got this at 7 o'clock, you've got this at 7:30, you've got this, you've got that, and then it was just a matter of me replicating that. And now with my success in selling houses personally, now I'm able to replicate that via duplication with other agents, so I can help them structure their business, help them structure their time, their budgets and stuff like that. So, we can get into that a little bit more if you'd like about, being a real estate broker is actually owning your own business. You're an independent contractor of your organization. Mm-hmm. So I just maintain the firm, and then I've got independent contractors under me that work for me, but they still own their business. They still do their books. They are 1099 employees that reconcile all their stuff, at the end of the year. So it's just a matter of being able to take what I learned from the military, bring that down to size for myself as an entrepreneur, and then, push that and help others. So that was probably the biggest takeaway from the military for me.
Yeah, I love that. And it sounds like there's definitely a lot of synergy with athletes as well. So as an athlete, I actually help a lot of athletes transition from sports to real life. And it's because in sports, exactly what you're talking about, we have the system, we have the structure. We know that we're waking up at 6. We know that we have, film, that we have school, and then we have film again, and then we have weights, and then we have practice, and then we have study hall, and then we go eat, and then we wake up and do it all again. And from that, of having that structure for so many years, I see that a lot of athletes really struggle transitioning out of that, because then they're going into the real world and there's no structure. It gets really tough, and it's a big sense of a loss of identity. It's a loss of purpose. It's like, who am I? I've been saying I'm an athlete my entire life. Or in your set, you could say, hey, I'm in the military. But for you, from that transition from the Navy to the real world, were there any struggles or any obstacles that you had to push through and overcome those obstacles to basically rebuild those structures, or was it a seamless process for you?
I would say that, there's struggles with everything, right? I think it's just, some folks have different struggles than others. What happened for me is I started selling houses in the military, which was, was a blessing. So I already kind of had my workflow and established my systems before I lost my steady paycheck from the military, right? I mean, obviously everybody knows the military has great benefits. So I went from a full W-2 employee making decent money with healthcare, retirement, all of that, to bam, on solo dolo, right? No income, no guarantee of an income, no healthcare, none of that. So that was probably my biggest struggle, was being able to take that leap and not give up on it, right? It was literally sink or swim. And I actually accepted a job with an intelligence firm, called Booz Allen Hamilton, out in Virginia. And, I got with my folks, and we talked to them, and I said, I'm fearful that if I don't make this jump and try this entrepreneurial thing, that I'll look back 30 years from now and tell my kids, what if? And so I went for it. I knew that I would be able to get a job if I failed, if I sank, and the rest kind of has worked itself out. But what that really set me up for was the opportunity to take my transition out of the military, right? That W-2 benefited, well-paying job, and now help others with their transition plan. So other folks, when you get into real estate, it's not something you're just born into, right? You've got to make that, that jump. So it's allowed me to help, create their transition piece and move it into them, so that I can reassure them that it's going to be okay. Make sure that they've got the appropriate amount of savings saved up. Make sure that they've got the appropriate support system at home. because one of my roles now is really recruitment and retention of agents, right? Helping them come over and do what they need to. So having done that myself, I really feel like I can speak from the driver's seat and say, hey, be mindful of this shortfall, this shortcoming, be mindful of this shortcoming. This is a great, this is a great benefit that you have that I didn't have, and I know of others that didn't have. You've got a great husband, a great wife, you got great kids, great healthcare. So that's really what I've been able to apply that transition personally to helping others. So.
Man, I love that so much, man. And one thing that I always preach a lot is, I'm not sure if you ever heard about this, but it's called the be, do, have, right? And this is a process. This is a principle to where you must become first. A lot of people skip the become part and they just try to go do. They just go, oh, let's do. But the problem is you haven't become the person that can actually do the thing. And that's what the military would do. That's what athletics would do. And that's what you're doing right now with Level Up Real Estate Group, because you are giving them the system and the structure as a coach or as a mentor, whatever you label it, as the owner, have you put your title on it, and you're guiding them down the process. So let's dive in a little bit more about the Level Up. So it was definitely a leap of faith. And one more thing I want to say before we dive in, I love that you just said, worst case scenario, I go get a job. Worst case scenario.
Yeah.
And people don't understand that. And I'm actually a believer of a hybrid method. I have a job and I'm an entrepreneur. I like my job. It is fulfilling, but I'm also building something else that wakes me up every single morning, and that's really my purpose. And I have things at work that I'm having a lot of purpose in as well. And if I didn't, I would have already taken the leap, right? So I love what you're saying though, because a lot of people are scared to take that leap and they're just holding back. But the thing is, if you want to take the leap, the worst case scenario, you just got to go get a job. And that is the same exact position you're already in right now. So just wanted to share that and reiterate that with the people so they can understand. But get into more of, being the owner of Level Up Real Estate Group. You guys have been around for a year or so, you said. How do you help the people? You talked about how you help the agents and how you go that route, but when it comes to helping the people and actually building wealth through the home buying process, can you tell us a little bit more? What differentiates the Level Up Real Estate Group versus all the other brokers and realtors?
Sure. Yeah. I one point of clarification. Level Up, I created that January of this year. So we're on today's March 12th. So we opened our doors on January 4th. So we're, just right at 2-ish months worth of, worth of time there. So
congrats.
I appreciate that. Yeah. So, so within my role specifically, there's a couple different, I have the ability to help people sell houses. I have the, ability to help people rent houses. I have the ability to help train and mentor other agents to do the same. Right. So it really comes down to, what does a real estate agent, or excuse me, what does a real estate broker do? Indiana only has real estate brokers. And a real estate broker is somebody who's licensed to make an income based off the transferring of land or, real estate, right? So if you sell a piece of land, in order to get paid for that, you have to have a license. To sell a house, in order to get paid for that, you have to have a license. If you help rent someone a house, you have to have a license. And so that role has really, really changed from what we used to think of real estate agents, 40 years ago. In all honesty, it's really changed over the last 10, 15 years, right? The traditional role of the real estate broker was the person that you would go to, back in the 80s, you'd go sit down in their office and they'd have a binder and they'd flip through and say, yeah, we've got this house, we've got this house, we've got this house. And so what the broker's job then was to be the one that spent the most money on advertising, had the most listings, because if you've got the widest catalog of houses to choose from, then when people come to see you at your office, you're going to be able to find the perfect house for them. Well, then came the internet, right? The internet boom. And then now you've got companies like Zillow, Trulia, which is the same, Realtor.com. You've got competitors in the brokerage space like Tucker, Carpenter, Keller Williams. You've seen all of them, right? Well, excuse me. Now our job has become more of a facilitator. And so just like Amazon, right? We got to get you from A to Z. You want to buy a house? This is how you buy the house. So now it's become a point of being able to be the best facilitator of the most transactions, or the most secure and confident transactions that you can do. That means me keeping up with market stats, seeing where the movement's going, where the wealth is transferring. So right now, just in central Indiana, we're seeing a huge movement of folks coming from northern Hamilton counties, right? Carmel, Fishers, and all those. They're now moving to the outskirts. So Boone County, Hancock County, Bargersville's on the come up. And so in my role, yes, I help folks buy and sell their houses, right? Just by keeping up with market trends and shifts. But it's also empowering and educating those agents that are a part of my organization to keep up with those trends themselves. So I'm a firm believer that I would rather be the guy that's diving into all the data and following those market trends, so that my agents can be out there selling more houses to more people, creating wealth and the homeownership space, instead of sitting at a desk and us all studying the same data. I'll just give it to them so that they can go out and do that stuff. So, my role is multifaceted in a lot of ways. Calls for a lot of long nights, a lot of long hours. But I take personal responsibility for, my staff. I've got two full-time staff members that both have, young kids. One, Tisha, my assistant, or my office admin. She went from my assistant to my office admin. She's got an 8-year-old boy named Lucas. And then I've got Miss Aubrey. She's got an 11-year-old daughter. And I feel that I should not sleep at night as if I am not working hard enough to make sure that their bills are paid to take care of their kids. And the same thing comes down for my agents, that, if I'm not grinding to keep my agents and give them the latest and greatest tools and tech and coaching, then they're not going to be able to feed their family. So that's really what my driving force is I put, the responsibility of those around me and their families on my back to make sure they're taken care of. I need a drink now.
Man, and that's, man, yes, it's bigger than just you. I love to work with
100%.
people and talk to people that it's bigger than just them. It's not just about making money. It's about enabling people to live the lifestyle and live the life and be able to feed their kid and put clothes on their back and food on the table. Like that's why the Level Up Real Estate Group is about to blow up, man. If it hasn't already.
It's on its way. It's on its way.
We're talking 3 months in. So and one of these things that I've been sharing a long time is a lot of people talk about failure, right? Like there is no, and I could tell this already in you. Like there is no failure. You have to make sure this food, and like you're like, I'm not going to sleep. There is no failure. Now there may be temporary defeats on the way, but failure is impossible unless you choose to fail. So Level Up Real Estate Group is not going to fail. And I absolutely love that you're not just on here talking about, oh yeah, we're making all this money and this and that. No, you're building and you're giving back to the people as a real go-giver. So as you talk about those trends in Indiana, for the people that may be listening in Indiana, what are some of those trends? I know you have some things that you can possibly share about what's going on. I would love to dive into that.
Yeah. So, here's the biggest trend in Indiana: buy a house. I mean, I can't say it, I'm not an economist, right? So let me caveat this, right? I'm not a classically trained economist. I didn't go to Stern School of Business. I didn't go to Harvard. But I feel like there's a lot of people out there that are planning for the market collapse, or the what if, what if this happens, or what if this happens. And when I sit down with folks and I walk through the process with them, what if what you think is going to happen doesn't happen? What if the market is secure? What if the market is stable? What if it is, it's continuing on, right? You don't know when you're at the top of the market or at the bottom of the market until you're 2 months past it, right? You don't know when the dip was. You don't know when the spike was. And so what we're seeing now is, last year, I personally refinanced my house for 2.17% interest. That is free money.
Ooh.
That's free money, right? Yes, it was with the VA loan, so that's a little bit different than some of the other, government products, but 2.1% interest. Now I'm at a point where I can never sell this house. Now, when I say I can never sell this house, does that mean I have to live here? No, that's creating wealth, right? Now I've got an asset that is that I'm only begrudging to a lien holder at a 2%, interest, a 2% interest penalty. I have this now where I could rent this house forever, right? For at least the 30 years that it would take to pay this off, with very, very, very little overhead. And if I would have refinanced now at the same terms and same clauses and everything that I did last year, my interest payment would be, or my interest rate would be almost twice as much. And what a lot of people don't realize is that your interest payment, or excuse me, your interest rate and the amount of money that you can finance are directly proportionate. The higher your interest rate, the less money you can typically put into a purchase price. And so you got to find that perfect equilibrium to meet your monthly payment goals. So if somebody was looking at a $300,000 house at the end of 2021, and now they're looking at a $300,000 house, their interest rate has gone up so much that their ability to spend $300,000 has probably trickled down into the 290s, 285s. Well, when housing prices are not going down, they're going 100% up, right? 100%, that's false, stat, but they're going up, right? We can all agree that the housing market is appreciating at, insane levels right now. That's not the downward trend you want to be on, right? You want to be on the opposite side of that, where you're reaping in the benefits that come from that appreciation. And so my big question to everybody is, yes, what if the market fails? What if, there's a housing bubble? What if all that happens? What if there's not? If you miss that boat, now you're a statistic that you're paying rent in a country that is becoming almost dependent on rentals. You don't have the single easiest investment that you can make as an individual, because you said what if and didn't get into that, to that buying world. And you're begrudging to a landlord for an unforeseen time until whatever happened is going to happen with the market. So, if I could say anything to anybody right now, it's have the conversation, right? Have the conversation. If you call any real estate broker, they're going to sit down and show you the statistics. They are. And if they don't, find someone who will. Look at the data, see the trend lines, so that you can make the best decision for you, your family, and your personal wealth management.
Mm-hmm. Man, so powerful. And it's kind of like just getting the game. Like, it's kind of like people are talking about, I want to get in the game, but like, is it the right time? You're never going to know the right time. You're just right. Not. You're just not going to know the right time. It's all speculation. Oh, the house is so high, it's going to crash. You don't know that. Like, that's
the same coin. People are jumping in on Bitcoin and Ethereum, right? And it's like, that is a commodity that's never ever existed before, right?
This is what they're doing.
They're playing the dice, man. It's like you are jumping in on a commodity that in history the world has never existed, right? I like to be in the real property game because everyone has to have somewhere to live. Everybody, right? That is the one thing that is guaranteed, is everyone has to live somewhere, 100%. So if, and I teach my agents this too. When you go to a restaurant, you need to be talking to that server. You need to be talking to your bartender. You need to be talking to the bouncer, right? Not just the people that we think have good money, right? That we think are the best home buyers. Everyone has to have somewhere to live. So in my world, I have unlimited customers, right? Everybody's a customer to my business. Your Aurora water over there, right? That's going to be a niche market, right? My world, you, me, neighbors, moms, dads, cousins, everybody's got to have somewhere to live. And it's just a matter of putting your priorities straight, right? Ethereum is not your priority. Bitcoin is not your priority. Putting a house and having a secured asset for you and your family for the next 30 years is your priority. Have the conversation. That's all it comes down to, is just reach out and have the conversation.
If y'all ever hear that, that means put that into your mental notes. Put it wherever you need to put it. If you watch this on a replay, rewind it back and listen to it again, because it's, man, like, just go do it. Just go do it. And I mean, and from my personal experience, I bought a house, my first house 2 years ago, and
congrats, man.
Thank you, man. It's been a blessing. Now,
yeah.
like, I was paying actually in my apartment. I was actually paying more money for my rent in my apartment in a little. It was a pretty cool loft. I ain't gonna lie, in Charlotte, North Carolina. It was pretty. It was pretty cool. I ain't gonna lie to you. It was pretty cool.
Charlotte's a nice spot. Charlotte's
It,
a nice spot. It's
it's very,
expensive, but it's a nice spot.
very,
Yeah.
very expensive,
Yeah.
and it's only going up. By the way, your rent is
Yeah.
going up, and that's one thing people don't understand. The landlords are gonna raise your rent every single year. Every single year, inflation is. We ain't gonna talk about inflation right now, but everything's going up, and they're gonna raise your rent. And all you're doing as you're renting is you're taking your money and basically you're flushing down the toilet. Yes, you have a spot to stay for a little bit, yeah, but that's all temporary. Now, I went to go buy a home. I'm a homeowner. Now that I'm a homeowner, my mortgage, and all everything else to go, we ain't gotta get into all that, but my mortgage is less than my rent. So I'm actually saving a little bit of money outside of a quick caveat. When you buy a home, there are things you got to fix up. So, like, don't let that fool you, by the way. There's a lot of stuff that happens. But all in all, I'm paying around the same, even with all the fixes. But on top of that, I'm building equity.
Yeah.
So my house, do I want to say this? I don't care. My house appreciated $100,000 since I've lived here in 2 years.
Yeah.
It's went up. Up. And I'm like, whoa, that's crazy. Like, if I would have been in my apartment right now, I wouldn't have had this equity that now, guess what? This is how we build wealth. This is wealth to where now I can pull this money out. I can put it into a new home. I can, whatever it is. Some people pull it out and use it as leverage to go buy them a rental home, or maybe they want to put into a growth stock to whatever it may be. Now you have options because you're in the game.
Yep.
But can for the people that don't know what equity is, and just to get to the 101 and the basics of it, can you explain what is equity and how do you actually build wealth with actually buying a home?
Yeah. So when you said that, my brain immediately triggered to I need to explain what equity is. So I'm glad you said that, right? So equity is the gap in what you owe and what the value of your house is. And so if anybody owns a home and they go to the wall and they punch it and they, put a hole in the wall and they look for cash in between the cavities of the wall, right? It doesn't exist, right? Equity is a paper form of currency, really. So when you buy a house, you hedge against the market, right? Based on current trend lines. So if I buy a house right now, let's say I get a 4% interest rate, a 30-year fixed interest mortgage rate at 4% means that over the course of the next 30 years, you will not pay anything more than 4%. So in theory, that means that your mortgage payment's going to stay the same now as it will 30 years from now. Now, quick caveat, there are a couple other, items included in that mortgage payment that can go up and down. Your taxes, because Uncle Sam's got to eat, and your insurance, right? Insurance companies are going to continue to raise your rates until you catch on and then shop them somewhere else, right? So this is your friendly reminder that if you've not shopped your insurance for your house, to do so. Shop it.
Man. I'm not gonna lie to you. I needed to hear that more than anything because my taxes went up because my house appreciated so much. I'm paying more.
Well,
they're going.
They're going to. Yeah, they're going to go up, right? Because the Uncle Sam's got to get theirs. So as the housing market as a whole goes up, and I've recently learned a lot more about this from our county assessor in Hancock County, Katie Mullender. She's great at this. There's a formula that the states use to make sure that their assessed values with an X percentage of what the housing market is doing. So you never want your assessment value, which is what you're taxed on, to be the same as your appraised value, because then you're going to pay a whole lot more in taxes. But the state's going to get their proportionate share of that, right? So shout out to Katie Mullender. If you have any feedback, drop it in the link or the comments below. Moving forward, right? Insurance. Your insurance agent, there are great insurance out there, great insurance agents out there, so I don't want to take this away from them. But every 11 months, you need to shop your insurance, because there's always going to be a different insurance carrier that is going to take notes there. That is going to want to get that policy. And that will ultimately save you money, right? Because it's all about, making sure that you have the least amount of insurance, or the right amount of insurance, but the least amount of premium. So every 11 months, shop that. So those are the only two things that are going to go up within your mortgage payment. Your principal, which is how much money you've borrowed from the bank, and your interest, which is how much the bank is charging you to borrow that principal, will not change if you get a 30-year fixed mortgage. So I had a conversation with a lady the other day. She bought her name is Miss Louise. She's 82 years old. She's from Eastern Kentucky. She bought a sewing machine in 1954 for $49, right? $49. This came up because I just bought my mom a sewing machine for Christmas, and it was not $49. It was far more expensive, and it was probably of severe less quality, right? Back then, they were probably steel and weighed 600 pounds. And so I was genuinely curious at what the value of that $49 was from 1954 today, right? Based on appreciation, inflation, the cost of the dollar, all that. It's about, I think, don't quote me on this, but I think it was about $325. So if you take that and apply that to housing, what you're doing right now is applying a hedge against the dollar and the rising cost, which is inflation. 30 years from now, if your house payment is $1,000 now and it's going to stay $1,000 now, $1,000 in 30 years will not be $1,000 as we know it. It will be $2,000 or $2,500, right? Depending on what the market does. So if you don't jump into that game now, jump into it, when the time is right for you, but realize that if you are begrudging to those rental payments for as long as you're in the rental game, you are going to be begrudging to that rising cost of what that's going to be. So in 30 years from now, had you not bought a house and continued to rent, you're going to be begrudging to that $2,500 a month, which was $1,000 30 years ago when you should have bought, right? So the earlier you get into the game, the faster you're going to pay that house off, the faster you're going to create that wealth, that asset, that holding, to have that equity to leverage it into other investments or a startup or something, something along those lines. But you have options at that point. You're not begrudging to anybody else's, wealth management.
Man, hey, you're hitting it on the head, Hart. You're hitting it on the head. By the way, if you are on the live right now, if you can drop comments, if you have any questions, drop some questions in, whether you're on YouTube, Facebook, wherever you're coming in from.
Yes,
you can feel free to drop it in. We have a guy here that's an expert in this game, so drop him in if you want to learn and understand. But it's so true, and I've never thought about it in the way you just said it about how we're hedging the market. I've never thought about it like that, but it's so accurate because, like you said, it's a fixed. And if people don't understand, I just want to one more time. It's fixed. It's not changing. Don't get a variable mortgage. It's a fixed mortgage to where your rate is going to stay where it's at, and you're going to pay that same amount of money for your mortgage versus the $1,000 to $2,500. Like, why would you not get in the game?
Well, the other thing too is it's almost cheating, right? So when you go to the casinos, the house always wins, right? When you buy a house, you always win. So when you make your hedge, right, and you buy a house right now, say you lock it in at 4% interest. If 5 years from now interest rates go to 12%, did you win?
Yep. Significant.
Yes, right?
Significant win.
Yeah. So let's say 10 years from now, interest rates are at 2%, which, by the way, outside of last year has never, ever happened in the history of the United States. 1980, interest rates were 16%, right? 16%. We've never, ever seen that, man. We're too young for that, right? So 10 years from now, interest rates go to 2%. Did you win?
Yeah. Still won.
Well, you're at 4, right? Interest rates went to 2. You can refinance. Exactly right. You jumped ahead of me there, right? You can then cheat and go back and re-hedge, right? Yep. At that point, right? So if you lock it in now, you're hedging against the rise. But in the event you mistimed it, you can always refinance and get back down to a lower rate with a new hedge. Now somebody's going to comment and say, well, yes, you can refinance. However, now you're back at a 30-year note. Well, there's other options. You can do 15-year. You don't have to refinance out for the entirety of what your house is worth. There's different ways to work with your loan originator on that to make that happen. But you can re-hedge at a later time, right, to make sure that you're building your accurate, appropriate wealth. Jay Kersey right there. He's that's one of the best loan originators this side of the Mississippi. You reach out to him, he'll get you taken care of on what you need. Very successful loan originator there.
Yeah, man. So powerful, so powerful. But for those people that don't understand refinance, right? Because You know, once you know it, it's kind of simple, and it's like, oh, they'll use refi, blah blah blah, like right. And people may understand it when it comes to like refinancing a car or a house. Like, I mean, it's all kind of the same process. But can you walk the people who don't understand what that means? You know, what is it? What does it mean to refi?
Yeah. So, you know, in that exact, you know, in that analogy that I just gave, right? When your hedge becomes, when your hedge of locking in that interest rate at 30 years fixed becomes a bad hedge, right? Meaning that the interest rates have now gone below what you locked your rate into. Typically, and Jake will probably comment on this if he's still watching and let me know if I said it right. But if your interest rate, excuse me, is 0.5% more than what the current market rates are, you need to consider refinancing. 0.5% more, I think, is the target of what is going to be the most cost saving rate drop, right? So a refinance is simply, if Devin, if you're loaded, man, right, and you give me a note on my house, just like a bank would, for let's say 4% at 30 years fixed, right? So you are my mortgage servicer. So every month I pay you my mortgage payment, principal, interest, and all that at a 4% interest rate. Excuse me. Well, when that market goes down, right now, let's say that the cost basis for interest is 3.5%, right? The market average is 3.5%, and your credit and all those things meet that demand, right? There's another guy, right? Let's say your dad, old Darnell. Hope he's doing well, Darnell. Shout out to you. If Darnell now calls, yeah, that's right. You got a great dad, man. If he calls me and says, "Hey, Hart, I know you own a house. I've got a 3.5% interest rate for you. I can refinance by basically Darnell will pay you as the mortgage company off the existing debt that I have and refinance into a program with Darnell at a 3.5% interest rate. Again, I just hedged against the market and the future growth at a 3.5% interest rate, vice the 4% that I was paying. Depending on what your principal and your interest are, again, principal is how much you borrow from the bank, and interest is how much they charge you to borrow that. Your payment could go down significantly. I mean, significantly. So what I would encourage everyone to do, it's amazing when I ask folks this, what's your current interest rate on your house? Do you know what yours is, Devin?
Yeah, 3.75.
Okay, 3.75, right? There's a lot of folks that don't know that. And if you don't know what you're, you know, but if it's the same token, if I ask, how much have you made off Bitcoin? They know that down to the penny. They know it down to the penny, right?
It's the shiny object syndrome.
They know it down to the penny, man. And I'm like, look, man, if you're if you're paying 5.5% on your house, which some first-time home buyers do because they might not have the most credit, not bad credit, but the most credit. When that time comes, you need to have a great relationship with your loan officer so that you can refinance when it makes sense to put more money back in your pocket monthly. I mean, that's the big thing. So refinance, it's very easy. Most loans have a streamline option, you know, so there's not a lot of hassle that comes with it. But yes, if you've not looked into refinancing, now is probably not the best time because rates are on the rise. But the next time you hear or see a post on Facebook about rates are dropping, you need to reach out to your loan officer and say, what can you do for me every day of the week?
I love that you gave me the point because I wasn't sure, because I probably should have refied. What was that, about a year ago? They were hitting 2% or whatnot.
So even with you, man, again, that half a point differential.
Half a point. If
you see again where rates are at 3.25, because you're at 3.75, you need to reach out to a loan originator about refinancing, right? Now there's going to be a lot of factors that come with that. I mean, I could go into this further and further and further, right? And I'm not a loan officer. So, you know, if there are any loan officers that are watching with me, please correct me. But there are a lot of folks who buy a house and they use a program called FHA, which if I had to guess, if you didn't put a significant amount of money down, Devin, you're probably in an FHA loan, right? FHA carries what's called it's got mortgage insurance. And so it might be PMI actually, private mortgage
PMI,
insurance,
property mortgage insurance.
Well, there's two types. You've got MIP, which is mortgage insurance premium, and then you've got PMI, which is private or whatever. There's two different ones, right? Again, I'm not a loan officer, so caveat me out of that. But if you're in an FHA product and you're paying that PMI monthly, right? You could get to a point where you have enough equity in the house. If you have had your house appreciate $100,000 in the last 2 years and you are still in an FHA loan, you need to reach out to a loan officer ASAP. Because even if your rate, if you refinance into a higher rate, right? So let's say you go from a 3.75 to a 4%. If you have enough equity in your house to refinance out of an FHA product and into a conventional product, even though your rate went up, your mortgage payment probably went down because you no longer have to pay PMI because you have enough equity, right? The point is, I don't expect anybody else watching or anybody else to understand the ins and outs of this. I don't at all, right? What I'm imploring you to do is have the conversation. Have the conversation with somebody that works in the space, that's an expert in the field. Nobody's out to get you. Nobody's out to make a quick penny. We believe in taking care of people. And if you can refinance or buy a new house and it makes sense and the numbers line up, have that conversation with somebody to better your situation. That's it.
Man, I love that you said that, because you don't have to understand this.
Yep,
you don't. Like, you
don't know what you don't know.
Yeah, true. Because I didn't know that only 0.5% down, I should consider refinancing. Now, I actually got a conventional 3% loan, which is pretty cool. So that was, I'm feeling pretty good about it. But that is a question. I'm pretty sure I don't play PMI, but I only put 3% down, and typically you pay PMI if you pay less than 20%. So I think I'm paying it, right?
Yep.
Pretty sure I'm paying it.
So if you made $100,000, if you have $100,000 in equity in your house off the 2 years, right? I would almost guarantee, if you have $100,000 in equity, that would mean that you, unless your house was $500,000, right? Which it might be, big baller. It might be, right?
Not yet.
So if it's less than $500,000, you probably have 20% in equity where you could refinance and take that PMI out of there. You see what I'm saying?
Yeah.
Because now you've hit that bingo. So now if you went from 3% equity when you bought it, so now it's appreciated $100,000. Let's say that your house you bought for $300,000. If your house really went up $100,000, that's 33%. You've got 67.5 or 67 point whatever percent in equity. 67 as a liability, 33 and a third is equity. You're beneath that 20% threshold. You need to reach out to somebody about refinancing and dropping that PMI. Now, if you call that loan originator and they say, well, the PMI is X amount of dollars a month, and with the new interest rates, you're going to go up to this amount, right? Let's say your PMI is $80 a month, but with the new rate, your payment's going to go up $80 a month. Then that's going to be up for you to decide if it's worth it. But you have to have that conversation with them to be able to do that. You know what I mean?
Exactly. That's the point that we're hitting at. You do not have to get on YouTube. You do not have to go read 10 books about this. Just
call an expert.
Like you said, Jake's in here. Call Jake. Call Jake. Hit him up. He said FHA.
Go ahead.
FHA, generally adds 0.85% to your current interest rate because of the PMI factor.
Bingo.
Good to know.
There it is, right? And now we don't need to break that down, right? Just know that Jake knows how to do it, right? He knows what those numbers are off the top of his head. Now, if I can, because that's the loan side, right? So if we're discussing equity from the housing side, I've also had clients that have called me who have gotten, who may have, and I've sold their house. They may have gotten careless with their spending or had life events that have, put them into a difficult spot, right? They've had a pinch. I'm seeing them over the last 2 years reach an unprecedented level of equity in their house that has allowed them to sell their house, right? And let's say they have $60,000 in medical bills. So God forbid, Devin, right? You get sick. And now you get, and I'm knocking on wood, brother, because I would never wish that upon you, right? But for
that's all good. Right? For learning purposes, because I don't do that.
Yep. So you got sick, man, and so now you got $60,000 in medical bills. Well, instead of paying those $60,000 in medical bills at whatever interest rate the hospital or the debt collector wants to throw onto those, right? Now your credit's getting destroyed. Now you've got blemishes everywhere on your credit. I've had clients that have reached out to me to sell their house to take advantage of this unprecedented equity to pay those debts off, right? So if God forbid in that situation that happened to you, you could sell your house take that $100,000 in equity that your house appreciated over the last 2 years and pay that debt off. There are folks that are going through that right now, right? The forgotten middle is real. And if you are in a situation where you feel those payments coming down, right, via creditors at 12, 13, whatever percent interest rate, your car is not paid off, any other kind of debt factor, student loans, any of that, take advantage of these still low interest rates, right? High threes, low fours, and the unprecedented equity that you have in your house. Sell your house and pay the debt off. Now, is that a pitch for me to get more listings? No, it's just the name of the game, right? That's wealth management. If you've got 2 vehicles that are at 6% interest and they're on a 60-month note, right? That is going to be 4 times more expensive than a 30-year house payment at a 4% interest rate. So if you get out of the market by selling your house and then have to buy one, while that house might be more expensive, dollar for dollar, right? Oh, that's not dollar for dollar, right? There's gonna be an offset, but you don't know what you don't know about that offset until you find somebody to talk to about your options. So from the housing side, that's what we're seeing a lot of now is people that are selling their house to capitalize on that equity and get a fresh start. Mm-hmm. Personal loans are not the key. I mean, that I can't tell you how many times I see. It blows my mind how many people run out and get a personal loan, man. It blows my mind.
Man, 95% of the time, that's not the way to go. Personal loan.
I go even higher. 99%. 99%. Do not get a personal loan.
Yeah.
Do not do it.
I just want to throw this out here for the people that don't understand, because if you don't understand how banks make money, like banks make money by lending your money. That is how banks make money. So it's like people talk about becoming the bank and people think it's so complicated. Well, how do you become the bank and this and that? Like if you have some money, if you have some equity, you can lend your money, right? I mean, I'm a private money lender. I lend money to real estate investors and they give me 10% interest back. Do I want my money just sitting in the bank and making 0.1 around there? Whatever it is.
Yeah.
Tiny interest. While the bank takes my money, they give me 0.01% interest while they lend it out and they make 6 to 10, whatever they're making. That is how you build wealth, guys. And if you want to learn more, you don't need to go to YouTube. Don't worry about the how. You need to go find the who. Who knows these answers? Who's the expert? Who understands how to do it? And go reach out and ask them the question. So I know we're at the top of the hour, Hart, but last question for you. Anything else on your heart? Is there anything else that's going on in your heart that you just want to put out there to the people as we close this thing out?
That's a tough question. I know when we came into this, I said, give me some direction on where you're going to take this thing. And, you were honest and said, I like it to be genuine and fluid, and it has been. So, first of all, thanks for inviting me on here, man. I'd love to come back anytime you want me. Next time we might be able to, convince Jake to come in here. Saturday's a little early for him, but, we'll see what we can dig up. I mentioned earlier that I'm big in the community, man. I really am. The forgotten middle is a very, very, very real thing right now. And, you've got Russia and Ukraine on the news. You've got politicians on the news that are talking about, there's not an income crisis in this country, that housing is affordable and all of those things, right? Everybody looking in the mirror, there's always somebody worse off than you, right? And I would encourage anybody today to take a second, think about that forgotten middle. Think about that person that's worse than you. I would encourage you to find a nonprofit organization, whether it be a women's battery shelter, a homeless shelter, an animal kill shelter, something, right? And ask them if there's anything immediate that you can do to help them. It might be a $20 donation. It might be SCPA needs blankets all the times for the dogs in there that need some love. Find something that you are passionate about and help that forgotten middle and those folks that are always worse than you. It doesn't matter the size. It's the thought. It's the principle. It's the things that'll make you think. That is what leads people to find their why, to find their mission. And if you've never stepped foot in something, excuse me, that you are passionate about and care about, that might be you might be the saving grace for that entity, because you have a solution that nobody's ever thought of. Take the time, stop in there, offer your help, offer your support, and do what you can to help somebody in a much less fortunate situation than you. Man. So, and again, man, I'm grateful for the opportunity to be here today. If anybody wants to reach out to me, I don't know if you have a card or anything that's got my information on it, but I'll be glad to send you a blurb to share with everything. So I'll be happy to help, man.
Yep, perfect. That was gonna be my last question, man. I absolutely love, you must, like, people always talking about get. Well, if you want to get, guess what? It's a principle you must give to get. So yeah. Love you dropping those words. But if somebody on here on the live right now watching the replay and they say, man, I want to reach out to Hart right now, like where can they find out and reach out to you right now?
I'll be honest, it'd be kind of hard not to find me. I growing up, man, Hart was, I got a lot of stuff for that, right? Your name's Devin. You didn't go with you didn't deal with the conflict that I had, growing up. I wasn't born on Valentine's Day. My birthday's not or Valentine's. It's not, I don't have a brother named Liver. There's no other Hart Sumer out there, man. Even if you spell it wrong, you're going to find me. So I'm on Facebook at Hart Sumer. I'm on Instagram at Hart Sumer. My company's Level Up Real Estate Group in Hancock County, Indiana. And like I said, I'll send you, I'm hartsumer.com. I'm hart@hartsumer.com is my email. I mean, I'm pretty branded there. So I'll send you some stuff, Devin, if you want to share. And yeah, man, I'm grateful for the opportunity to be here. I love you to death, man. I'm glad to see you doing so well.
Yes, sir, man. I appreciate it. And we'll definitely have to reconvene and run it back again. So thank you so much for dropping all the knowledge and just giving back to the Freedom Finder family. So thank you so much, Hart. And man, I appreciate it. So reach out to Hart. He said it. Look at the name, take a picture of it, write it down, whatever you need to do. Reach out to him, because you do not have to have the answers. There are experts out here that have these answers. So go reach out to them, talk to them. Everybody's not out here to try to get you. People are out here to help, and there's real go-givers out here in this world. So absolutely appreciate you, Hart. That's my wife right there. She said, thank you, so informative. Ooh, I'm about to say informational. I don't know what I'm about to say.
His brain's on overload there, Mrs. Scott. Very nice to meet you there, and thank you for the support.
Yes, sir. Hart, man, thank you so much, man. It's been a blessing to get you on the show, so thank you so much, man. Really appreciate it, bro. So don't have to drop off right now, but I'm gonna go ahead and do the outro. But thank you so much, Hart.
Yeah, man, thanks.
All right, Freedom Finder family, man. That was Hart Sumer, man. We go way back, and as you see, he is leveling up with the Level Up Real Estate Group. It is an amazing thing. Again, reach out if you don't know, and you don't know what you don't know. Reach out to some of those experts, because that is going to be the way you can start to build wealth by buying a house, get in the game, get off the sidelines. And if you don't know how, reach out to somebody, because it's not about the how. You need to replace your how with the who, because there's already people out here who know how to do it. So, and if you don't know already, man, Freedom Finders, we do give back. We're building a youth mentorship that we're giving back to the kids, because we truly believe that we must teach the kids so that they can be better than us and they can elevate, because they are the future leaders in the world. So if anything like that, you can reach out to myself, Devin D. Scott, on all platforms. Vice President Shaq Tinsley. Any of the information, we are building some things right now that we can give back to the youth, and we are a nonprofit as well, as Hart was talking about. So anything helps, because we're giving back and making a difference. So if you like today's show, make sure you subscribe. On YouTube, wherever you at. I'm not a YouTuber, but do all this stuff. Like, subscribe, put a comment, whatever it is. But really big on being go-givers. And if you don't start your day with some gratitude, join me with the daily gratitude every single morning. Devin D. Scott on all these platforms, Instagram and all that, Facebook, all that. I go live to talk gratitude, because gratitude is the one thing that you can do that by doing so. Everything else will be easier or unnecessary. So thank you guys so much for tapping in. Click the share, go follow Hart Sumer on all platforms, reach out to an expert, and we will see y'all again. So that does it for me, Devin D. Scott, signing off. Y'all gonna be great today.